welcome to Under the Radar Report. We're interviewing Richard Bailey from Kuttabul Investments. Richard's been around for quite a while in the markets, but he's only been a fund manager for 3.5 years, and it's quite an innovative sort of fund. It's a hedge fund, so it's market agnostic, and he's had double-digit performance for 3.5 years, which is, in contrast to the market basically flatlining it. So welcome to Under the Radar Report.
Thank you, Richard. It's nice to be here.
Well, it's great to have you under the radar. I guess the first question people want to know is what's driving that performance. Like how do you pick stocks to buy, and what makes your fund different?
Right. Well, part of the difference is that because I take long and short positions, so in a downturn like March 2020, we're able to cut stocks that we think might be vulnerable. We can get short stocks, short index futures, and able to manage that market better than a fund which had to be 95 or 98% invested in stocks.
So when those sort of stocks come across your barrel, what decisions do you have to make to decide to hop in?
Right. Well, we're looking for stocks. Ideally, we want to see stocks that have earnings growth and an increasing rate of earnings growth relative to prior expectations.
Right.
Because that will drive stock performance. And if you can get a situation where the stock was suffering from negative or neutral sentiment, and the outlook's changed, so the earnings outlook is improving, and so is the sentiment, and so we're hoping to see then not only reflected in earnings growth and increasing rates of earnings growth, but also in the multiple that the market will pay for the stock. So like a PE expansion.
You're getting that double whammy.
Trying to get both.
So is it kind of like the momentum that you're trying to play, or is it more like you're looking for stocks that are in turnaround situations?
I'd say earnings momentum is important.
Earnings momentum, right.
As opposed to price momentum. Yeah, and earnings momentum. Yeah, and there could be a turnaround. It may be a case of companies struggle, management might have changed. It could be a cyclical turnaround. Maybe it was a tough industry.
Yeah.
The outlook's improved.
And just before we keep going, you said up the top you're looking to sell stocks as well. So what sort of stocks you?
Well, there's a couple of things on the short side. So the inverse. One of the things is the inverse of so companies where there's a deteriorating earnings outlook, especially relative to prior expectations, where valuations may have been stretched and they need to come down. There could be stocks where there was what I'd call a deflating hype situation, where a stock may have got to some unbelievable valuation, or a stock that can't be valued, but then something's burst the bubble, and on the way down, there can be money to made there as well. And then there's a third category probably, which is debt. Companies that have got real balance sheet problems, that are struggling to repay their debt, or they're labouring under debt. They've got the cash flow to service it. Perhaps the debt is too large compared to their market cap. It's hard to even raise the capital to restructure the balance sheet, and companies like that.
And I guess that brings us on to the sort of some of the winners that you've had. Can you mention them? Like you mentioned PWR Holdings recently. Yeah,
well, PW, which we still own, it's been a great performer for us. Brisbane-based company, manufacturer. It designs and manufactures cooling systems for high-end sports cars as well. And they're now pushing into other areas, like into some aerospace applications. So it's a founder-led company.
And I think founder-led companies do have good track records overall. Is AP Eagers a founder-led company? Because you mentioned that one as well as being
there's a majority shareholder in Nick Politis, but AP Eagers is one that we've done well out of as well. I mean, it was one we managed to buy on its knees. So they'd had a string of challenges. Car sales had been weak. Holden shut down. They'd made a major acquisition, which turned out to be a good acquisition, but it came with a cold logistics business, which was totally non-core, was losing money, and they were struggling to sell it.
And what was the catalyst for you to buy these?
Well, eventually they managed to sell that. They had to mark the price down twice, I think. They managed to sell the cold logistics business, and automatically that was an earnings upgrade straight away.
Okay.
And at the time, because it was a weak market, it was a pretty soft car market anyway.
Yep.
This stock, once you normalise for that loss-making business and a few other bits and pieces, it was on 3 or 4 times. It was cheap.
So you were kind of like looking at this as being a sort of a value boost. When you bought it, you thought, they can get rid of that.
Yeah.
We'd sort of call those sort of stocks sort of hidden value, because their sort of depressed earnings are capitalised in the share price. So if you release those earnings, you can make a lot of money, like you have with AP Eagers. Speaking of which, what are you sort of buying now? What
Well,
stocks?
we've been active in the travel space.
Yeah.
So the likes of Webjet, Tourism Holdings.
Well, having a look at the share price of Hello World, I can say that they're pretty obvious.
Yeah. Well, we'll say obviously travel was depressed, as everyone knows.
Yeah,
We couldn't
yeah.
travel. But during that period when those companies were struggling, but there was also a lot of consolidation taking place. So smaller players had to exit or sell to larger players. The large players had to take a lot of costs out of their cost base. So they've now come into the upturn. Even though we've got perhaps a soft consumer discretionary environment coming up, volumes in travel are still well below 2019 levels. So there's still catch up. And then you really need to then, like the base from 2019, we should normally be higher again. So there's still a lot of headroom, I think, in that whole sector.
Did you buy gradually, Richard, or do you need more and more evidence that they're going well?
No, what I found, experience has told me that it's best, I find, for me, to, if you make a decision, to buy it all day one.
Right.
The day you decide to buy it.
Right, so you don't leverage.
Otherwise, I find you tend to buy and you keep buying higher and higher. And next thing you know, that those later purchases aren't as really as attractive as the ones you made at the beginning. But try to make your mind up.
Yeah.
Go, yep, I want to buy this stock,
Yep.
and buy your full position.
And
At least buy halfway there, and then maybe you've got to do a bit more work. And perhaps another stock that's interesting at the moment, Lindsay.
Oh, Lindsay,
Yeah,
the
Lindsay
logistics
Australia,
firm.
yeah,
I've looked at them a long time ago, and it seemed to me they were kind of stuck in a rut. But you think they specialise in refrigerated transport? Or something,
well, what's really helped is the Scott's Logistics went under. So which competitor? So a competitor went out of business, and they've picked up a civil amount of business from that competitor.
Right.
And have been able to buy some of the assets out of the, I think from the receivership from the receivers, I guess. So they've been able to.
And what's that kind of multiple that they're trading on?
I think 10 times.
I think they're
something
pretty
like that.
cheap. Yeah.
I mean, we saw a number of years ago, Baby Bunting, when their major competitors fell over. I think it was Toys R Us maybe, or Babies R Us fell over, and then Baby Bunting's picked up all this additional business.
Right.
So that's
Just
sort of,
staying at
that's sort of eked away, but that's a different market. But I think with Lindsay, they've picked up this bit, and I think if they can serve those customers well, and they've got a long track record of serving their customers well, they can probably retain a lot of that business.
But it's kind of like a business that's managed to withstand some pretty tough conditions. So they've been, forgive the expression, road tested.
Right. And rail.
That's under the radar patent on that one.
Yeah.
Any stocks that you're selling at the moment, Richard? Like
Well,
stocks that you're either selling out of or actively shorting?
I don't like to highlight too many stocks that I am short, because if people own them, they don't like that too much. But I did actually, before I came in this morning, I keep a diary, and every day each day I just jot some tickers down of things that there's things that are interesting going on. And there are a few. So for example, in the last 3 or 4 weeks, so Synlait Milk, which is a powdered milk producer, which we sell to A2 Milk and others.
Yeah.
So they're suffering from demand softness. So there's some demand softness coming out of some of their major customers. So there's new contracts which haven't quite started. They're waiting for re-registration of their product with the Chinese regulator. And anyway, their earnings are going down, and they've got a lot of debt. So I'd say, look, there's a company who's probably, definitely is under some pressure. We saw Bubs. On powdered products too, it's selling goat milk into the US. So Bubs got into the US on an emergency piece of legislation that the Biden government put through, and that put a big boost under the stock. But the cash flow hasn't really delivered to support that. So they've sort of been challenged. Star Casino Group, as you know, has got all sorts of problems with lower volumes.
Do you think it's got sort of downside even from here?
I'm saying these are sort of companies when I look at that news and I go, well, this could be of interest. Each star perhaps is getting closer to the bottom, because eventually they'll get to the value of the property assets. Yeah. But the regulators making life very hard for them. Volumes are down in Queensland as well as in Sydney.
Well, there's kind of a lack of volumes when you don't have the overseas gamblers come in. Yeah. And what about, I guess, just overall looking, across the experience that you've had on the buy side and on the sell side, are there any lessons that you'd like to impart to the? Oh
well, there's no doubt that if you stick to quality companies, your life is better for you. Yeah. And there's always tempting to venture into some novel product or novel idea, and there might be some really fast gains to be made, in days. Yeah. But over time, my experience would be, just
Don't follow the fashion. Look at the fundamentals.
leave the fads alone and just stick to quality businesses.
And like, I guess the question on everyone's mind is where does Kuttabul come from?
By the name,
that is like I've seen a lot of funds management names, and that is one of the more, certainly I would say, original.
Yeah. Well, it's actually I was at a company meeting and one of the directors said to me, "Oh, I've seen you on the register. You know, are you from Queensland?" I said, "No." I said, "Why?" He said, "There's a town up there called Kuttabul." I said, "Oh, I didn't know that." But no. So when I was living with JP Morgan, I wanted to, when I left, have a email address and a domain name all set up, and I'd registered KCMG, and the K was now Kuttabul Capital Management Group.
Yeah.
But I had another K in mind at the time. I won't tell you what it was.
Okay.
But then I changed my mind. I thought no, actually I don't like that. So I was already committed to the K. I needed a new K.
Yeah.
I thought Curios, perhaps, no, I didn't think that. But then I just read a book. One of my aunts gave me a good book about the Japanese miniature submarines that came into the Sydney Harbour in the Second World War, which I've just read. And there's an interesting piece in there about HMAS. HMAS Kuttabul is now the name of the naval base down at Garden Island, but it was a ferry. It used to run from Milson's Point to Circular Quay.
Oh, okay.
And that was requisitioned as an accommodation ship, and then it was sunk by Japanese torpedo. After it anyway, I thought, well, there's a K, and it was a good story. I really enjoyed reading it.
Yeah.
That ferry used to work Milson's Point to Sydney, which is more or less my commute. And the ferry was built in Newcastle. I was born in Newcastle, and the name means wonderful. I thought, oh, there you go.
Well, there you go.
Wonderful. Kuttabul, Aboriginal word for wonderful.
You can't say goodbye to our viewers on a better note than that. It's just been wonderful having you, Richard, on Under the Radar Report, and we'll
look
to have you again sometime soon.